Welcome back to Rockstock Channel. It is Friday, October 10th, and Rodney, Matt, and I are back for a Rockstock recap. And we have a special guest, one of our besties, Tom Woolrych out of Berlin, Deutsche Rohstoff. Tom, this is your first time in video form with Rockstock Channel, but you did join the spaces at length, that 2.5 hour spaces we had at the beginning of September. And we'd love to, you just came from a site visit to Quebec. I think you visited Q2 Metals and PMET. And you're a geologist. We'll give you your background in a minute, but just wanted to flag, earlier this week, I published my lithium ion bull entitled Rational Exuberance, and I came up with a couple of new mantras under Trump 2.0. Most followers for us a long time know I've said kind of go long with Tesla short, go long with China short, and commodity equities follow commodity prices, and keep it simple, stupid, keep it spodumene, stupid. But under Trump 2.0, I've said now that it justifies some new ones. In particular, go long what America is short, critical minerals warrant Uncle Sam's equity, and the Donald, rather than just commodity price, the Donald Trump's price fundamentals. And there has been a movement away just from upstream, keep it simple, stupid mining to KISS, first of kind processing, like MP for magnets, LAC for lithium carbonate from clay, Hyperion X, titanium from scrap, and who knows what's next. Matt's battery materials review has a chart in it, as always, looking at commodity prices, and we see silver is up 18% in the month, and copper is up 5%. We're going to talk about that. Tom has some views on a possible switch from gold, to copper. And Matt also wrote a number of blogs this week. We'd encourage you to look at blogs.rkequity.com to look at those. But he wrote first and second piece on solar and how analysts are underestimating the impact on a whole bunch of raw materials because of their lower than he forecasts, Best's numbers. And so there was an aluminum and copper bit. There was also a silver and antimony, tied to that. And today, in response to big news out of China yesterday, impact on graphite, which we referenced in an interview yesterday as well with Dmitry Silverstein. So with that, and just before we begin, as a reminder, Matt, Rodney, and I are strategic advisors to and hold equity interests in a number of the companies that will be discussed in today's podcast, but we are not, of course, financial advisors, and nothing in this video should be considered investment advice. Please do your own research and read the disclaimer at the end of this video. And Tom, representing Deutsche Rohstoff, also owns some of the stocks he's going to talk about. And finally, we'd like to thank our sponsors, Lithium Royalty Corp and USCF Investments. Lithium Royalty Corp is a lithium-focused royalty company with a diversified portfolio of royalties on mineral properties around the world and trades on the Toronto Stock Exchange, ticker symbol LIRC. And USCF Investments is an ETF pioneer for nearly 20 years, with 15 funds providing exposure mostly to commodities futures, such as CPER for copper, ZSB for battery metals, USG for gold, and SDCI for a broadly diversified commodity exposure. And with that, welcome, Tom. For our guests here, why don't you just give us a little bit of your background as a geologist? You literally wrote the book on commodities. Benji will flash up that book, but also tell us about what is Deutsche Rohstoff, in Berlin, and your overall investment strategy.
Sure. Yeah, thanks for having me. I was quite surprised when you said I hadn't been on the show since given our long history. I guess we've been working together for 3 years now. So yeah, I'm a geologist, as you said. I wrote a book for, I guess, youths, you could call it, on Australian geology. Gives a sort of 4 billion year history of Australia. I did that with the CSIRO, the sort of state science organization in Australia, and I work for Deutsche Rohstoff, and I guess my focus is really discoveries. We have a barbell strategy, trying to get early into discovery stories. I call that geo-alpha. That's the way to beat the market. So, that's the definition of alpha in investing. It's being able to beat the S&P. So I was getting smashed around by the S&P in 2021. So I, came up with this idea that I could be early, basically from the first drill hole in discoveries, and improve my performance. That the other part of the portfolio that I don't talk about much online is the beta strategy, which is simple, commodity price following. So buy gold stocks when the gold price is going up, as an example. Geo-alpha and commodity beta. So that on the commodity beta side, I guess lithium has kind of been a difficult one recently for the last 18 months, as lithium futures prices have been tanking, and the equities have followed it down. So haven't had a huge focus on lithium for a little while, until let's call it 3 months ago.
But Tom, we met 3 years ago. I mean, you made a name for yourself in the lithium space by having identified Azure very early, and that ultimately got bought by SQM and Hancock. Unfortunately, we missed that run, but you do have an investment which you like in Western Australia, and a few that you have in Quebec. So why don't we kick off with that? You recently were in Quebec on the Q2 site visit. I think, did you also visit PMET or any of the other properties there?
No, I didn't. I kept it to Q2 because that's what we're currently holding. And I think for me, for my style, for the geological alpha style, really the levers are going to be on Q2 as they unearth the project. And I have, I've built a leapfrog model that we can go through today, just to sort of explain that thesis. So I wouldn't be averse to buying PMET, Winsome, a few others in Quebec based on scale potential, and then putting that into a basket of lithium beta stocks. I would add Sigma, I would add Pilbara, Albemarle, companies like that, and then I'll put PMET in my sort of beta basket as it starts to as the world's eye turn to it, as people realize that lithium's gonna be a thing in the future.
Okay, so Tom, can I just jump in? So your beta basket is your exposure to the lithium price, and your alpha basket is your really kind of deep value, early to the market basket. So given what we know about PMET, huge discovery, huge potential, and given the early drilling results and the met test work results on Q2, can you just talk a little bit about your feelings as to why you've got Q2 in the alpha basket rather than perhaps some of the other players?
So I get, I'll talk to Patriot on that, and then I'll get back to Q2. So Patriot, I feel, is largely known now, right? So we kind of know how big Shaki is, and
Shaky.
we can't. Yeah, I'm not even going to try and do JC Evanson. He calls it that, so I call it that as well.
I
So
call it the ore body formerly known as Corvette.
Let's call it that. I mean, we've for years we've just called it CV5, but Shaki is kind of known. So it's really, they're really a developer, yeah. So that's why they've put that into that basket now. It's 109 million tons. Help me, Matt, but probably maybe bigger now. Look, I think Cisco is considerably larger than that. So that's really the reason Q2 is my big geo-alpha bet.
Okay, and just to clarify, you're obviously a geo. And the way that you arrive at these views is you actually take these drill results and put them into a geological model of your own. Is it not? Yeah. Well, here we go. So you have a very detailed view as to the sort of geology and potential of these several bodies.
Yeah, that's right. So Q2, they do a great job communicating to the market both their logging and their assay results. And so I can project those, using that data that they give us in their announcements, I can project those in 3D. And then using this software package called Leapfrog Geo, I can interpolate volumes.
Just to sort of put that in less complex terms, I mean, basically what you're doing is you're building a resource estimation for this project before the company is able to release a resource effectively.
Yeah. So a resource estimate is a laborious, technical, it's costly, it takes forever, but essentially companies do this internally as they go. It's the way they design and track their exploration drilling. So what I'm showing in gray here is what Neil's told us are pegmatite. Yeah. So the guys have gotten really good at identifying spodumene rich pegmatite. There are pegmatites in the project that are barren, but they give us detailed logs. You can see to the 10 centimeter, to the fraction of a meter, 258.1 meters to 446.7 meters. That's a famous intercept, over 188 meters long. And using Leapfrog, you can generate a 3D model of just what they call pegmatite. So you can see that it outcrops here. This is CO1. We landed here with a helicopter, literally on the discovery outcrop. The guy that discovered it from Canadian Mining House made me a coffee in his personal helicopter, made me the coffee and put a shot of Canadian whiskey with maple syrup in it. So that was a real pleasure, a real honor to be able to enjoy that in freezing cold conditions.
And just to go backward a little bit,
Yeah.
this pegmatite's like an intrusive body, so it's come up in sheets between the country rock. Yeah,
of course. So what we can see in the field is that this intrusive body is squirted up through a suite of what they call greenstones. These are extremely ancient rocks in northeast Canada, in Quebec and Ontario. And they're great host rocks, actually, greenstones. They're great host rocks because they fracture and they create pore space that the pegmatites can intrude into. So this particular pegmatite is unusually large. And now once
do you have an estimate? Do you have an estimate, Tom, how big you think this thing could be? Because they're talking about the maiden resource sometime, I think, in Q1.
Yeah, I'll show you. So when I get assays, I can then infill the pegmatite body with the assay data. So just that body there, you can see this number here, 118 million. That's cubic meters, and the specific gravity of these pegmatites are around 2.6. So you could simply go 118 by 2.6. It's over 300 million tons.
300 million tons.
That's
and Patriot's what, Matt?
Yeah, just over 100. Well, what's been drilled out already is just over 100. I think we're all realistic that it's a lot bigger than that, but the current resource is just over 100.
Right.
Yeah. So that's again, it's a very simplistic way of modeling the resource, but you can see already, even if I'm out by 50%, which I'm only normally out by about 10%, you can see that the maiden resource is going to be large.
So Tom, basically, just to summarize, you're not super bullish lithium at the moment. Once you get bullish, you'll buy a basket of lithium names as you just described, but you are holding this name to some degree. I don't want to put words in your mouth, but where we are on the Lassonde curve, for everyone who knows kind of like the Lassonde curve, is that they're drilling, whereas Patriot, you said, is more known and is mature. I'm going to call up the RK Equity scoreboard here, and in the emerging projects in hard rock, Patriot's the biggest market cap, 500 million. Second biggest is Wildcat, third biggest is Core, and then you have Q2 Metals, is about 130 million US market cap. So basically, a third of what Patriot is. I'm also going to call up here. There was a note, another person who we know and joined this space is Christopher Williams at Adamus Intelligence. He published a good note just 2 days ago on this site visit, referencing Q2. We'll have a link in the show notes to that. But he was saying that he sees incentive price of lithium, spodumene needs to be 1,600, right? Assuming that it's 1,600, he benchmarked here the various projects, and he put Q2 after Rio's Galaxy as the lowest cost, and then Adina, and then PMET.
Yeah,
I think the difference between PMET and Q2 is one was mining cost, and two was distance to rail and port. I
that's
think
right.
that was, so. But is that correct in what I'm saying? Is that you own Q2 because of where it is on the Lassonde curve? You said it's not so known, and maybe in a different market environment, the stock would have run. What are the ingredients? Like, why has Q2 been so slow to be understood by the market? Like what you're identifying here. Like if you look at Azure, you called, Patriot, you called. What's why is it different with Q2?
Yeah, it's you touched on it. It's where we are. It's where we are in the current lithium cycle. We're really early in the lithium cycle. I think this thing would have been worth 1.5 billion in 2021.
Jesus,
Um,
really? So
yeah,
you think it's a 10 bagger from here if lithium starts
if
rallying?
if we get 4,000 spot, I mean, Matt will probably is the best person to comment on that. But look, even at 1,600, these things are extremely valuable ore bodies. I think 1,600 was the number that PMET used in their first study. Their next study must be coming out now. So we'll see what price they use.
Winston used
What,
quite a bit below that, I think. Rodney, do you remember, or Matt? I think it was like
So
less than
they
1,400.
used, I think they had 1375 Howard for theirs with quite a
Right.
good RR on that.
Yeah,
But then a
that's what I
low
thought.
strip ratio.
Yeah, Winston's caught a bid this week. We're going to have Chris Evans on the program next week for an update on what's happening there. So Tom, time in the market, right, where we are and price. What about the cesium angle in Patriot, which is also relevant, in Winsome? Is the market, what do you know about that, if anything?
I was really surprised by the market's reaction to the cesium work that Patriot did. I guess that's a function of where we are.
Surprised that it didn't react, or surprised that it did react?
Surprised that it reacted so positively. On the initial, very early work that they put out on, I guess that's on CB13. And the share price went up 25-30%. So I mean, I've had a bias sort of trained into me by working for a major company, and essentially I wasn't allowed to explore for anything that were in opaque illiquid markets, and I still kind of think that way. So yeah, no strong feelings on cesium.
Okay.
The West is going to need it, and yeah, the guys are extremely excited by the NSR that this high cesium rock can generate.
Okay, and just quickly, last thing on lithium. I think you own Wildcat. We just interviewed AJ. That's going to be published shortly as well. Could you just share quickly your view on Wildcat, and then let's turn to your copper and silver views.
Yeah, I have got a Taba model, but I guess that stock's moved beyond that sort of thing. I did invest in it initially, um, due to having a close relationship with Alex Hewlett, and we stayed in it because you've already mentioned the scale, but it's also extremely close to port. So, like Q2, there's massive advantages in terms of cost being on or next to infrastructure. So, Taba sitting on a mining license. Taba's big. Um, they could get this thing to market extremely rapidly. So the thesis in kept on buying through the whole downturn for Wildcat. So we're looking okay. Our position is looking okay after being down quite a lot. Oh, we lost Rod.
Okay.
So
And
yeah, that was
Tom,
one.
sorry to interject again. You didn't actually tell us about Deutsche Rohstoff, but I also know you because you are one of the largest shareholders in Almonty, which is a tungsten story. And when we were looking through the performance of various commodities in the past month, tungsten was up 11%. That stock, I've known that since its IPO at a buck. It's languished for 10 or 12 years, and now it just had this massive rally. So good on you. But what is Deutsche Rohstoff, and why do you own such a big stake in Almonty, and you have this kind of side pocket of other investments? You're not a hedge fund, but you operate like a hedge fund, I think.
Look, I think we call ourselves private equity, listed private equity. So we have the ability to be able to invest in um, private or public companies. Our cash flowing assets are all private. Fracking assets in the US, they spin out lots of cash. And these other investments are a way of sort of hedging against the oil price. You can see DR0's stock is making all-time highs, largely based on our non-oil investments at the moment, right? Because oil price is kind of languishing below $60 a barrel. So Almonty was the investing masterclass from Thomas Gutschlag, our founder, and supported by Jan Philipp. So over the years, as you said, the stock languished. It was stuck floating between 80 cents and $1. And Deutsche Rohstoff, in their strong conviction before my time, did participated in every placement, kept the lights on at Almonty, supported Lewis Black because they knew there would be a time where the world, was going to start calling out for the wares that Almonty has at Sangdong in South Korea. So when Trump came around, that thesis played out, and I think over the years, Deutsche Rohstoff invested something like 15 million in Almonty, and that position's now worth 200 odd million. So that just shows that the sticking to quality, being patient, having that private equity type approach is super valuable.
And being a contrarian on tungsten for a while, and betting a proven jockey in Lewis Black. So good on
Yep.
you on that. Okay, so why should people switch out of gold into copper and silver?
They probably shouldn't. They should wait for a gold sell signal. We've still got a lot of geopolitical, financial, etc., strife around the world. That's the goal. The thesis, the de-dollarization, and all that stuff. That's the reason why you own gold, and that there hasn't really been any change, in that market. So, but the valuations are getting very stretched, and people are sitting on a lot of profits. So people like myself are now starting to look, what is the next gold? Where's the next trade? And thankfully, after decades of languishing, the copper markets come to life for over $5 a pound now, which if you look on a long-term scale, that's quite a good price. It's not quite what you might call incentive pricing, where lots of projects are going to be put into production, but it's a strong price, it's a good price, and copper equities are starting to react.
Tom, one of the things in copper that I think has been very interesting is I think everybody's accepted for some time the medium-term tightness story in copper insofar as the demand is quite robust and supply has been struggling to keep up. But one of the things that's held people out of the market has been the sort of near-term concern that we could move into a global economic slowdown. What's your thinking on that? Because obviously the reason to hold gold is for the defensive trade, and you're suggesting not necessarily to sell gold yet. So what's your thinking on the sort of slightly more macro outlook at the moment?
Yeah. So the way I think about copper is more on the supply side. You're right. At BHP, we had on the wall that there was going to be a copper surplus 5 years out, 10, 15 years ago, right? So this a massive demand that was supposed to be coming on, that's been predicted for ages. But what happened recently was large projects have been cut back. It started with Panama Cobra, First Quantum's project in I guess it's Central America, is it, or is it South America?
Panama, anyway. Yeah.
And then more recently, a tragedy at the Grasberg mine in Indonesia, where their block cave had an ingress of mud. So what that means is these large, globally significant copper producers are all have all come offline at a Kamoa had a collapse as well. So that's put a lot of pressure on supply. So that's what people are reacting to. That's why the copper price is about $5 a pound. So what that means is there's going to be dollars flowing to exploration, and people like me can finally start putting capital to work, getting money in the ground, and making big copper discoveries.
Okay. I mean, for me, given the sort of current sort of inventory level, which is not hugely elevated, but is a little bit more elevated than some commodities, and also the issue that sort of operating rates in semis in China aren't that high, there are risks on the demand side, notwithstanding these quite substantial supply shocks that we've seen.
Yeah. I can't really comment, but that's certainly been what's put the brakes on the copper market, over the years.
Yeah, agreed. And what about silver? Have you got any views on that?
I joke around with my mates that silver's a byproduct. I say that
Definitely is. There's no denying that.
Yeah, I just try and break their balls on Twitter a bit, but fact is the silver price is $50 today. That's extremely high, and that means silver miners, there are almost none. Copper miners that get silver credits will be making good money on the back of that. There's even so-called silver companies have a lot of gold and copper in their projects. So silver, I get it. It's there's going to be, it's a partly industrial and partly a precious metal, but it is sort of the poor cousin of gold. The gold rally certainly helped.
They wouldn't see it that way.
Yeah. No, I get it. Again, this is something that I working for a major early in my career. Got beaten into me as well. It's just when the ratio is 80-1, you make all your money on gold.
Okay. So given that your view is very much on the supply side, and we've obviously talked about copper, we've talked about lithium to some extent, etc. Are there any other commodities out there where you sort of look at the commodity and you're like, where are we going to get the next sort of ton of material from?
There's nothing that I would call an investable. There's no investable plays that I see there, but niobium was one that people talk about a lot, and been a massive discovery, WA1 in Australia on the Northern Territory WA border. That's extremely interesting to me because of the scale. It's an extremely exciting discovery. It's a carbonatite, which is an unusual type of geology. And that's going to be a globally significant strategic asset. There's only really one other Western asset in Brazil that's producing niobium, and it comes out of China. So, that's that. It's been the Luni deposit was found, I guess, 2 years ago now. So they've been struggling through that. That Lassonde curve, as Howard was talking about earlier, as people try and value these extremely rare, extremely valuable deposits before they actually start flowing cash.
And obviously, one of the biggest success stories in the last cycle, the China Supercycle, was obviously iron ore. What are your thoughts on iron ore and the sort of steel market this time around?
Yeah, again, no strong conviction. There's a lot of stuff coming online out of West Africa that seems to be,
I financed most of it 10 or 15 years ago.
Yeah, it was all found ages ago, but these things are massive, tens of billions in capex.
Yeah.
Difficult jurisdictions to operate in. There was fighting over, if there was corruption involved in the asset. So, but again, it's bad for Australia and Brazil, right? But it's probably good to have a diversity of iron projects coming into the market.
Mm-hmm. Okay, cool.
Tom, I want to circle back just quickly to gold because a tweet came to my attention this morning from Frank Giustra in response to Anthony Scaramucci. So I'm going to just put this up here. Anthony Scaramucci, who I don't know how to describe him. He used to be the White House communications director, but then he had a falling out with Trump. But he has bigger claims to fame than that. But
I think
he basically says this is a gold versus kind of Bitcoin argument. Gold's rise this year is sparked by demographics. Rich old people that run institutions are buying it because they see a full-on currency debasement ahead. However, as the younger people age into senior positions, it's going to cause a major allocation switch over to Bitcoin. And then you have Frank Giustra, who's older than Anthony Scaramucci, saying, with all due respect, you are completely missing out what's happening here. This gold market has not been driven by investors who only recently started dipping their toes. It's global central bank demand that is the driving force.
Yeah.
We are heading towards a global monetary system reset with gold playing a central role. So you're a young guy, Tom. You're more Anthony Scaramucci's age than Frank Giustra's, but I'm sensing you're more in Frank's camp.
Yeah. At the risk of sounding like a boomer, I do love pet rock. I've got a quarter ounce sitting here on my desk. What can I say about that? So I think there's something interesting happening via Tether, where they're going to put gold on the blockchain. I think that can sort of marry the crypto bros and the pet rock grandpas, and keep them all happy. But look, I think that, there's a place for both assets. I'm not a maxi on any of them. I mean, it's a fascinating conversation. It's clearly been the gold run is clearly a story of central bank buying. I don't believe in bankster suppression and all that stuff, all the conspiracy theories. The futures markets are extremely liquid, extremely efficient, it's like a doctor's scalpel in terms of trading. You can put millions of dollars in and out of gold, hundreds of millions of dollars in and out of gold with a click of a button at relatively low cost and high um uh, what's Hairball? Yeah. Anyway, you get my point. So, yeah,
Okay, but
no
so you're in the
conspiracy
camp
theories.
okay, so regardless of Bitcoin versus gold, you believe what's happening in gold is a global monetary reset
Um,
based on debasement of
yeah,
the U.S. dollar.
yeah, yeah. Okay, let me say it this way. It's a shame. It's a shame Rodney fell off. So when you need to have lived in a non-developed country to appreciate the US dollar, right? So I lived in Zambia, and they wanted to pay me in kwacha, and every month I would just say, no, don't give me any kwacha, just give me Aussie dollars or US dollars. I can't spend all this kwacha, and they inflate 10, 15, 20% a year. So I guess that I don't buy into the story that the US dollar is not going to be sort of the default currency for the world and the way the world does business. In fact, the recent weakness in gold has been largely driven by a short-term strength in the US dollar, something to do with the government shutdown. I don't know the details. But people thought, oh, okay, well, I'll sell a bit of gold. They had a peace deal in Gaza as well. So, yeah, I think the dollar's here to stay. I think gold's an extremely attractive um, hedge against geopolitical and high debt. And then I'm certainly looking for other opportunities to put the frankly massive returns we've had from gold, um, put it to work in other things.
Right. And Tom, lastly, before I let you go, I just want to respond to some other tweets here. Respeculator, who I think you follow, and some others have made a comment that any froth, and this is rational exuberance was my title for the lithium bull. So there is a lot of speculation happening, but he's saying it's really isolated to select critical minerals plays, but that the major miners like BHP and Rio and Anglo and Glencore are trading below their 5-year highs. And I responded to that like I agree that big mining is poised to re-rate, and I've been waiting for that for 5+ years, and I'm holding an ETF called PICK, which owns non-gold, non-oil, basically the big miners, and their 13-year chart it's like flat, to down, which kind of shows how unloved the sector is, but these are the biggest miners in the world. The assets that they control, the world-class assets they controlled, are very, very rare, right? You can't just like reproduce the scarcity of those assets like, NVIDIA or Microsoft or other companies. Yeah, they have moats, etc., but new entrants are disrupting industries all the time, but that doesn't happen so quick in mining, and PIC has a 3% dividend yield. So I was just suggesting it's like better than cash. But I've been holding that as I've been holding URA for uranium and COPX for copper and GDX and SIL for gold and silver, because we've basically been battery materials, minor metals, critical minerals guys. But I've held all of those for a number of years, and
Not
they're
made
all
money.
coming good. They're all coming
Yeah.
good. But
Yeah.
the big miners have not yet come good. And I'm making this argument that a lot of it follows gold, right? You've had gold inflows. You said the gold price has gone up and maybe you should switch, but the gold equities, from what I understand, and the silver equities are still pricing in much lower prices than the gold price and the silver price. But all people chase returns. If you look back
Right.
last quarter, last 6 months, last 9 months, and at the end of this year, people say, oh, wow, gold outperformed, critical minerals outperformed. We should be allocating more dollars to mine commodities. So then I think like the big miners have, are poised to catch up. So do you
I agree.
only, what you agree with all that? I mean, so do you invest in the big miners or only the, the
That
exploration stories?
we wouldn't invest in an ETF the way you have. We would pick individual names and invest in them based on their underlying commodity price strength. So I'm not sure what miners you own via your ETF, but I'm guessing it's Rio, Barley, BHP predominantly. Yeah. So those guys have been suffering base from low iron prices and low coal prices, essentially. So a bunch of other factors as well. So yeah, what's going to take for those big miners to really take off, and they could, is going to be an improvement in those the underlying markets. And what you're seeing actually is coal is kind of bottoming. Iron is kind of bottoming. There's not massive demand. It probably goes back to what Matt was saying about this postulated global recession. But if we do get an all clear and people do start building, those major miners are going to rip as well.
Thank you for all that. The point of the re-rating, though, is that even so, like, the prices may not be going up of those commodities, but the valuations of those companies are still whatever 4, 5, 6 times, EV to
The
EBITDA.
earnings. Yeah.
And the market could just say, wow, that's on a PE basis, or an EV to EBITDA basis, that's crazy cheap relative to 15, 20, 25 times of other, a rotation could happen from the Mag 7 into these equities purely based on valuation, regardless of whether or not iron ore starts rising or coal starts rising in price. Anyway,
Agreed.
we'll see. But all of this is kind of somewhat behind Matt and I have been saying and hoping, that a commodity super cycle like we experienced at the start of our careers in the early 2000s, is underway. Matt thinks there'll be different commodities this time, and I think he's probably right. So let's switch to that. I think Tom, you need to go. I don't know. Rodney was in a car. I'm not sure if he's able to rejoin, but there are a couple of other topics that we want to cover in terms of big news in China, in Argentina. So Tom, do you
Yeah.
want to join for that, or do you have to go?
No, I'll jump off. But look, thanks for having me. Really fun discussion. I've enjoyed Matt's contribution recently. It's been 2 months now, Matt, 3 months. So
Yeah, a bit longer than
yeah, thanks for having me.
that. Okay.
Yeah.
Cheers, Tom. Appreciate it.
Thanks a lot, Tom.
Bye.
And before Matt and I, and maybe Rodney will come back, not sure, get into some of these other topics, I just want to highlight again our sponsor, USCF's Sustainable Battery Materials ETF, which trades as ticker symbol ZSB and invests in metal derivatives instruments and equities exposed to the electrification thematic, including holdings in aluminum, copper, cobalt, zinc, lithium, silver futures, and equities like Albemarle, MP Materials, and Aluka Resources. And also would like to thank our other sponsor, Lithium Royalty Corp, which owns and holds a number of hard rock and brine royalties, including Signal Lithium in Brazil, Winsome Resources in Quebec, which was discussed earlier, Core in Australia, and Trey Q in Argentina. You could follow Lithium Royalty on X at lithium_royalty and visit their website, lithiumroyaltycorp.com. So Matt, let's start because I just mentioned Argentina. Scott Bessent was buying, I don't know, $20 billion of Argentine bonds. Argentine equities were soaring. Malay, tweeted a big thank you, like all over Twitter yesterday was this bullishness on in Argentina. We spoke earlier this week, offline with John Kanalitsis of Lithium Argentina. Galan popped yesterday. Noah, we just had on the program. Any thoughts on the macro and then the micro lithium, within Argentina?
No real thoughts on the macro. I'll leave that to you and Rodney. On the micro, I mean, I think made this point before, but the point is that the lithium brines in Argentina are, in the bottom half of the cost curve, probably towards the middle of the second quartile, towards the first quartile of the cost curve. And they are medium to high grade brines. Most of them are amenable to direct evaporation. They don't need DLE. And there is a shortage of these sort of assets around. So, in that sort of environment, if Argentina's macro issues are getting taken care of, then, these things should be looking very, very interesting. It should be trading, in my view, materially higher than they're valued at the moment in the market. And, if I look at the brine equities compared to a lot of hard rock assets, we've talked before about with hard rock, you're only going, halfway through, you're only going to lithium concentrate. You've still got to get it converted to lithium hydroxide or lithium carbonate. But with a brine asset, you're going all the way through from brine to lithium carbonate, with the possible exception of Galan. And you're sitting there thinking, well, why is this thing trading at sort of a tenth to a quarter of the valuation of some of these exploration stage hard rock assets? Bearing that in mind, and you sort of sit there and scratch your head and wonder why that's the case. And for me, those sort of valuations are not justified for the Argentinian brine stocks.
Okay, I'm going to, Benji, call up here an interview that Scott Bessent gave on Argentina, just to kind of focus the macro a bit. So why don't we play that?
Argentina is a beacon in Latin America. President Milei has done the right thing. He is trying to break 100 years of a bad cycle in Argentina. He is also a great ally for the U.S. He'll be coming to the Oval Office next Tuesday, and he is committed to getting China out of Argentina. They're all over the place in Latin America. And when people say to me, how is this not America first? I'll tell you why it's not. Do you want to be shooting at more gunboats like in Venezuela? We do not want a failed state.
Okay, so having listened to Scott Bessent here, look, there's an election here coming up, and I think they're just verbally supporting Argentina and Milei in particular. Maybe the U.S. government's meddling in other people's politics, as Americans sometimes complain other countries do in the U.S. politics. But the reality is, just like Trump mentions rare earths, if he mentions lithium, or his administration does, it's supportive of those commodities. In this case, Scott Bessent is talking here that China is all over Argentina, and we need to be players in Argentina. And Argentina, very much the play is critical minerals. There's copper. I think, forget who was on the program, but it was Gabriel Rubaka of NOAA mentioned BHP has come back into Argentina in copper. And, again, Lithium Argentina, it seems to be rising with Lithium Americas, but not like on its own merits. And Lithium Royalty Corp has Triple Flag, which bought a piece of the TREQ royalty from Lithium Royalty Corp. In their quarterly results, just announced that they're getting their first revenue from TREQ. So we've talked about this before. There's not only Galan and NOAA and Lithium Argentina, which is relatively scarce public opportunities compared to prior years, but Lithium Royalty does present an opportunity to have some exposure to Argentine brines through not only TREQ, which is controlled by Zijin, but the Mariana, which is controlled by Ganfeng. Anyway, we're bullish Argentine brines, if it hasn't become apparent. And Matt wrote about that a number of times. Okay, so Matt, I guess the final big kahuna here topic is what's happening in China. Oh, here's Rodney. He's
just
back.
in the nick of time.
Sorry, chaps, I have a bad connection.
Yeah, no problem. So There are a couple of things we commented on about gold in Argentina, Rodney. So maybe after we talk about China, if you want to chime in on those topics. But let's turn to the news. Like, just so, Matt, what happened out of China, yesterday, in your analysis, and what does it mean?
Okay, so basically, China has come in and done what it's sort of been skating around for a while, which is that they've put a hard stop on the export of metals technology, particularly around rare earths, around graphite, around cathode materials, which is going to really, impact various elements of the critical material supply chain. And it's not that we haven't had dry runs on this over the last 2 or 3 years. And the back end of 2023, I think they required graphite export licenses, which stopped graphite exports for 2 or 3 months and created a huge ruckus in battery markets. And then obviously earlier this year, we've had them making changes to the rare earth export regime as well. So we've known for some time, or certainly specialists in the space have known for some time, this was likely to happen. But it's definitely come out in a significant way now. And, if you look at the press reports, I would say probably 99.999% of the press reports focus on the rare earth value chain. And certainly, this is relevant to the rare earth value chain. But for me, the big impact that nobody is talking about in the markets, and certainly not in the press, is in graphite and anode materials. And that the difference is that, in rare earth mining, China has 70% of the market. In rare earth refining, China has like 90% of the market. In magnet manufacture, it's higher than that. But in graphite, China has 99% of the midstream graphite market for battery materials. And, if China turns off the taps in graphite, that is a really serious thing for the global battery industry. Because whereas I might use LFP in some batteries and I might use ternary cathode in other batteries, I use graphite in every single battery that is manufactured in the world at the moment, lithium-ion battery. So if China turns off the taps in graphite, that's a big thing. And I kind of feel that politicians have mucked around with the knowledge of how strong China is in the global battery value chain, the graphite chain, for 5 or 6 years and not really done anything. And now China is concentrating the mind. And there are very few companies in the world that can actually, get us out of this, and none that can get us out of this in the next 3 to 6 months. So really, we need to start investing in these ex-China anode material value chains, and we need to really start doing it yesterday. And of course we won't. It'll be some time from now, but it really does emphasize how important it is that we start putting capital into some of these core niche materials, which perhaps most people haven't heard of, but are really important to modern life. Graphite is an obvious one, high purity manganese, antimony, all of these areas that aren't really well known, but are very important.
What's interesting, Matt, again, going back to those new mantras that I have, it's no longer just commodity equities follow commodity prices, because while nobody is talking about it, Mr. Market and the equities always seem to know a little bit ahead of time. Companies like Nouveau Monde Graphite have rallied quite aggressively in the past, few weeks. And today, Syra, Novonix, the two actually that are U.S. listed, Novonix, fully U.S. listed, Novonix and Nouveau Monde, are rallying, the most aggressively. We've had Nouveau Monde has been a former client of RK Equities, but that's graphite's time may have come, because the graphite headwind of price and complete whatever manipulation or control by China has cast a pall over graphite for a large number of years. And unlike lithium, there aren't like publicly listed, or rare earths, you don't have producers who speak in English language, telling the market every quarter. But in Nouveau Monde's case, they have GM as a partner. In Novanic's case, they have Phillips 66 as a partner. So there's a synthetic and a natural, graphite play. I think those are two interesting, names, and we hope to have Nouveau Monde back on the program relatively soon. Okay, in my view, right, though, this ratcheting up, okay, it hasn't taken place yet, right? It's supposed to take place at the end in November, but Xi and Trump are meeting on the sidelines of the APEC conference in Korea late in October, and I very much saw. Look, the MP Department of War deal happened in July after China put those controls on in April. So this is another ratchet up in the
I mean,
negotiation.
there's no doubting it's saber rattling, and in some ways the Chinese have caught Trump at his own game. I mean, obviously, Trump moved first with the import tariffs, and then China went with the kibosh on rare earth exports. Well, now China has moved early, and pushing Trump into a more difficult negotiating position. So it's going to be very interesting to see how it goes, and indeed whether these restrictions do end up happening or not. But
Matt, isn't
I
that
think
the
it's a
kind of
really important. Go on.
Matt? Sorry, isn't that kind of, it makes it then quite tricky in order to make a commitment and an investment for the long term
Well,
to set separate supplier.
yeah. I mean, yes and no, but obviously with the caveat that, as with the rare earth space, China put the controls in and then sort of ameliorated them. But we recognize that we need to have control of the rare earth space. So the US government came in and did the MP deal and is now starting to make funding available for, development assets elsewhere in the world. I think we have to sit down and say, look, we have to take these minor materials seriously now, and governments have got to move in and start supporting, the funding situation, given that the equity markets are so weak and the prices are weak enough that it's very difficult to raise equity for these new projects. I mean, if you realistically want to have a supply chain that's not beholden to China, then you have to put the funding in place to allow these projects to go ahead. Because it's impossible to raise this money in the equity markets for these companies now. So we need to start to see arrangements like we've seen in rare earths, to some extent, like we've seen in lithium, in these other minor metals.
I view it like we've talked about a grand bargain, and at various times throughout the year, we've suggested, maybe CATL and BYD would be welcomed into America. I was giving that a 50-50 chance. I think the probability is higher now than 50-50. That there was an article in Bloomberg which was talking that Xi was offering $1 trillion worth of investment in the U.S. as part of an overall deal here. And I think we're not going to go to war over this. I think it's great news on a number of fronts because it's not going away. Well, and we're not going to like escalate. Like we're too interconnected economically that I don't, there'll be a blink. This is art of the deal negotiation, right? Chinese are enormously good negotiators, and they have a lot of cards to play here. And the AI boom, it's a race, it's a fight. We're not going to. I think we're going to be trust but verify. The TikTok deal seems to be reaching a conclusion. We'll see about that. All of these ingredients to me speak to a deal is coming, and it's going to be positive. It'll be positive for the markets, positive for the global economy. But within the context of that, it's just like we need to get our act together on critical minerals. And so the reshoring narrative is going to be strong. The U.S. is going to continue to take equity stakes in projects. And again, investing is not just going to be based on commodity prices. It's going to be based on which winners are going to be picked by the government.
Yeah. I mean, I think one of the big issues in some of these sort of smaller materials like graphite and high purity manganese, and to some extent antimony and whatever, is it's difficult to have a market leading project. So for instance, if I sit down and I fund, Lithium Americas, that could be a huge project. I mean, any one of those lithium clay projects could be a big project. It could produce 50, 60, 70, 80, 90, 100,000 tons a year of lithium carbonate. But there's very few, graphite, high purity manganese projects around the world that could produce to that sort of extent. There's very few antimony projects. There's not a lot of silver projects, certainly not in the US. So I think the problem is, and it's one of the things I wrote about in this month's BMR, that the real problem is that the governments don't tend to engage with small companies. And unfortunately, the only companies that are involved in these smaller segments are smaller companies. So we've got to find some way to open up the sort of conversation between national government and the sort of junior companies that are developing assets in these smaller commodities.
Well, MP is not that big, and Lithium Americas is not that big.
But there's not that big, like billions, and then there's not that big as in hundreds of millions.
Trilogy, they just wrote a check to Trilogy, right? So I think it's happening. I think they recognize it. They have to play, and they have a lot of smart venture capital minded people around them, and venture capital is investing in small companies. Mark Andreessen talked about it's time to build, and he's applied some of his time and effort. Cerberus and others in the US have arms that I think they'll get there on the junior side. Just one thing that you said, graphite's not necessarily scalable, or there's no Lithium Americas style, but we had a conversation with Tolga, and they have like a technology where they can actually take a lot of the material that is hard to recycle, the black mass. That story a bit better than me, but if you could scale in a similar way that Hyperion X is taking scrap, it's processing, again, not just upstream mining. If you could scale processing and then take material from the variety of other sources, then it is very scalable. What do you know about the Tolga operation?
Well, I think potentially he's gone again. Potentially it is more scalable, but there is there's a development pathway. So at the moment it's not scalable. I can't turn around and say we're going to put in a 100,000 ton or 200,000 ton per year graphite project, anode material project. Because it's not scalable to that extent, but potentially once the pathway is proven and once there is a more supply of batteries and therefore more black mass available, then it could be scalable in say 7, 8, 9 years. At the moment, There's probably not enough black mass available to support that sort of scale.
Okay. And on that note, Rodney in Cape Town in his car, I think, is imperfect way to, yeah. So unfortunately, not so much Rodney in this episode, but glad we had Tom Woolrych. We've been going longer than an hour, so I think we'll just end it there. Thanks, Matt. Have a great weekend, and another, a lot of exciting things happening in our space.
Yep. And long may it continue. It's better than being ignored.
Absolutely. Okay, great. See you soon.
Cheers.